Welcome back, everyone. I know those of you that are filing in from outside, I'm going to try not to deafen the crew that's already in here. Thank you for being timely. We very much appreciate that. We do have some amazing speakers, and you are definitely not going to want to miss the next one. Can I just ask, did you guys have some good breakout sessions? Yeah? Did you solve world peace? No? Yes? I heard a yes? That's awesome. All right, world peace is taken care of. We'll get on to data and safety. That's perfect. Sounds good. Right now, I'm going to bring to the stage Brian Wieser, who has just joined GroupM as president of Insights. Ad Age has called Brian, and I quote, the most quoted man in advertising. Yes, Ad Age, you're welcome. The most quoted man in advertising. He'll be talking today with Suzanne, Vranica, and the advertising editor of the Wall Street Journal about the state of the industry, and Brian's move to the inside of GroupM. Very exciting. Thank you, guys. Take it away. Sure.
Anywhere, right there.
All right, where should we sit?
Right there.
Right here's great.
Wow, we draw the short straw. Come closer, folks. Just so you know, we're taking attendance. Anyone who's not here will definitely be written badly about in the Wall Street Journal tomorrow.
Or in one of my notes.
Or your notes, which used to mean something.
Used to mean, oh.
Kidding. Congratulations.
Thank you.
Yes, always great to have one of the last panels of the day.
We're going to have some
But we're going to have a good time, right? Okay, I'm going to start it off. I was sitting back this morning listening to the big agency heads sort of talk about the state of the industry, and who better than to put these questions to than you, since you had sort of a bird's eye view covering it for the street at one point. I'm going to take a couple of minutes to just basically bring up some research that you sort of came up with. And clearly your new GroupM title, Optimism, is showing. You put out basically some new data that basically showed that the 6 largest ad companies grew 2.1% organically in 2018. That's kind of anemic in my point of view.
Tepid.
All right, whatever, we can argue about adjectives. But my issue with this is we are probably in what one would term a frothy economy. Things are growing great. Can you boil it down? Every week or so, we've got another holding company head calling me to tell me, pointing left, right, up, down, what's to blame? Why is the growth stalled in this industry? And clearly it's more than one thing, but I would love your perspective on why is this happening now?
So I observed, and again, it's not hard to put on my former analyst hat for this sort of thing, but what I wanted to point out in a note that we sent out is that if you account for the fact that IT services firms are out there providing services around business transformation, other things that can be considered to be adjacent to traditional agency work, but really are where most of the agency holding companies are trying to orient their work, that's probably another couple percentage points of growth. Separately, we know that fast-moving consumer goods, which are, depending on the holding company, 20%, or in other cases 30% of the revenue, are probably cutting their spending by roughly 10%. Now, this is a slice, and it's not necessarily the right way to look at it. Right. But if you looked at the ex-FMCG, broadly defined agency services, including related IT services, you get to a 6.5% growth rate, which is probably closer to where media is. And that helps explain some of the gap.
Right.
At least in 2018.
Absolutely.
Right?
And we've now suffered through this for more than that, right? I mean, it was even worse the year before. So clearly, it's multiple things. It's sort of a perfect storm. You've got in-housing. You talked about CPG. Clients are cutting spending for any old reason. But Matt Baxter brought up this trust issue. And I hate to tell everyone at this conference, but he is absolutely correct in what he says. If you were to believe the marketers that we talk to every day, there is a severe drought in trust in this business. The ANA just did that survey and showed the trust. I want to talk to you about sort of, when you look at these numbers, do you factor in trust? I mean, clearly the transparency issues in this business have caused lots of marketers to run from the sort of non-disclosed or let's say less transparent forms of media buying, which were huge margin growth for a long time for this business. Is that also eating away with it at the sort of margins of the holding companies? And do you see that as also another layer to this? Because when you listen to the analyst calls that the holding companies do, I mean, they range from CPG cutback, and then one holding company goes, they're lying, it's not them, it's this. I mean, you literally cannot get anybody to come to an agreement. So I want your sort of expert hat on how much of this is due to this lack of trust and the transparency issue.
Well, it's definitely true that if you look at the organic growth trends for the agency holding companies circa 2014 and 15, you're definitely pushing towards more like a 5% organic growth rate.
Yep.
Now, what's interesting, and some of the data I was trying to lay out to emphasize this point, is that if you look at marketing in a broad definition as a percentage of revenues, it was also more elevated in 2014 and 15, and then that came down. Now, chicken and egg, what came first, right? Was it that marketers had more pressures because of activist investors, because of just ongoing competition from new sources? Or was it that they realized they could be more aggressive?
Yep.
The trust issue. Now, the term I use, again, you can go back to my old work and you can see the term I used, enhanced contract scrutiny, was a catch-all term.
Yeah.
Meant to characterize what I thought was happening as an analyst, right? What seemed to be clear, again, looking at the industry from the outside, was that, and we can't see the media agencies separate from the creative agencies. Right. But the one thing that was consistent across all the holding companies, and which I'm inclined to believe is still primarily true, is that the bulk of the weakness was in the creative agencies and remains in the creative agencies. It's the place where and I think certainly pitch consultants or anyone who's been involved in that at more of a macro level probably would agree with that.
Right, but let's step back for a second, because you and I are as old as dirt and been covering this business for as long as we can remember. And the creative agencies for the last 10 years haven't been doing well.
And it got worse.
And it got worse, but also the media buying companies were making up for those losses with great margin businesses.
Yeah.
And all of a sudden, the media agencies are like, look at them, right? So like, all of a sudden you have the contraction on the high margin stuff that we were used to getting, and then the creative agencies who didn't reinvent. So that's a double whammy for them.
It probably was, but I can say this without having seen our numbers,
right.
And even just referring to what's publicly available. It also seems logical that the number, again, I've written this previously, and everything I've seen so far validates this point of view.
Yeah.
While there was an element of, again, what enhanced contract scrutiny meaning clients studying closely what was in their contracts and then realizing that, oh, wait, did we need this? Do we need that? Should we do it this way? Should we do it that way? And maybe that did lead to some of the compression that we've seen. The bigger factor has been on the creative side. Right. Again, that seems to be true universally across the industry. But the bigger point that I'm also making in this note I wrote this morning was I'm trying to connect that marketers were cutting their spending more aggressively. Yeah. And now, is it that they decide to cut their spending and they say, hey, agencies, you guys are non-working, right? Because nobody in this room works, right?
Non-working.
And therefore, we can cut spending. I've also argued that unfortunately, because the industry has done a bad job of learning how to speak procurementese, which is a language, that they're really bad as an industry at helping marketers understand that they shouldn't be optimizing trees, they should be optimizing forests. And I think that speaks to where I think some of the greatest opportunities are. Arguably, the IT services firms have done a lot better with that.
Right. Well, this idea that this transparency and this call to action that the industry is under to be more transparent is not going away. If you were just enjoying your breakout session or having coffee or downstairs at the craps table, new headlines came out from Ad Age a few minutes ago that the FBI has issued subpoenas to a marketer at this point. Journal actually reported that subpoenas were issued earlier this year, and that means there's been a grand jury that actually has to be formed. So we can all talk about this, is just people putting rhetoric out there, but this is an active investigation, and I'm wondering from your perspective, what kind of new pressures do you think this will sort of cause for the business?
Well, we can't talk about any specific investigations, of course, but I think that it's safe to say that agencies more generally have to continually work at rebuilding trust, because I think this was really, really clear to me in my time as an analyst, that clients, unfortunately, either didn't understand the contracts that they were signing in many cases, or didn't understand the world that they were playing in. And so, unfortunately, that may have led to, well, is some of what we saw. Let me be a bit more specific. I think that one of the, I remember an earnings call from one of the world's largest marketers in 2015, where the CEO made a very specific comment about how great digital is because it's so cheap.
Right, the race to the bottom. And clearly there's blame all around on both sides.
I know, but
of the equation.
this aggressive pursuit of cheapness at any cost, pardon the characterization, was destructive for everyone. Yeah. Now, the good news about what went into the K2 report, certainly, and again, as an analyst, I was able to point that to investors and say, this is a great characterization of many of the elements of how the industry works. And I think that what we've seen, let's go back in time. 2003, my first time around in agency land, yep. I noticed the industry looking at procurement in a not too favorable light, let's just say. I was wondering.
This has gotten so much better.
But. Yeah, but I thought this is kind of weird because I may not know anything. Again, I came from Wall Street into agency land then. And having taken exactly one class in procurement in business school, I realized I may have been the expert in a company of 70,000 people. And I said, but wait, let me get this straight. We represent our clients' largest outsourced expenditures, right? Like, right. Are we not outsourced procurement? Isn't that kind of how we should be thinking? No, shut up, Brian. So. Anyways, the world got better in the sense that, first of all, I think generally agencies have gotten better. There's still a long way to go in speaking that language. But I think when it comes to what the K2 report did is, and I think the work that the ANA did was helpful in this regard as well, helping the clients who didn't realize that they didn't know what they were doing. Right. They got them a lot smarter, and that's ultimately beneficial.
And clearly that's what's going to happen here, right? There is going to be, was there bad behavior? Was there criminal behavior? Was there misunderstanding? Was there ignorance at the client level? And that's probably just the next investigation that we're all going to be watching.
Trust will be improved by, the point is that trust will be improved
right.
because the client and the agency, and more importantly, I always think of like the ANA AFM conference as one of the more, this is an important conference too, but I always think of that conference as particularly important because it's where procurement comes out and where agencies come out. It's often been a conversation between the commercial function of the agency and procurement. That conversation still needs to get broader.
Right. Well, you bring up procurement, and so we'll put the K2 report and the FBI aside since we've all had a weekend of investigations and everything else. But when I listened to this morning about, we need a new model, we need to come together. How much of what's taking place in this industry is self-inflicted? For the last 10 years, we've heard about pressure on fees, right? Clients come in. I just heard in December, a big marketer went to its agencies and said, I want to cut across the board 25%. And yet we're all, come to these conferences and everybody's like, I'm going to say no. But somehow, at the end of a new business pitch, your bosses, the holding company heads, sit in a room, and each and every one of them, one undercuts the other, and there's this sense that you have devalued what you bring. How does this business get out of that?
Well,
because that's half the issue.
Yeah, I agree, and I think that some of this is for the publicly traded U.S. and European publicly traded holding companies. Some are not in American or European ones and maybe in a better position. I think that the investor base and the analyst community unfortunately does not understand the industry particularly well.
At all.
And unfortunately then that means further that the holding companies need to do a better job with transparency. And by the way, and I've said this all along, nobody's done a better job with transparency when it comes to public reporting than WPP. Of all the 19 companies I covered, far and away the most transparent.
They spend more on probably risk and compliance.
Yes, if you've never
if you read it, you will see
annual report. It's amazing.
But that doesn't mean that they're not part of the problem.
No, let me get to my, I'm going off my point. My point is, I think that the more that investors can be persuaded that agencies are capable of being durable entities, that they can grow, they can be lumpy.
But I don't think that's my point. They cannot grow if each of the holding companies are going to undercut the other. Like
Which they shouldn't do.
I mean, Nick talked about having let's have I'm doing it to him because he did it to call me out this morning, but going and coming together and putting something on paper, right? We sit and listen, both of us, to the analyst calls, right? And each holding company now, they point out the other guy, right? Quietly, right? There's a little inside joke and we're all following. Well, guess what? There was a pitch and blah, 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 and I wonder how they won. And it's, so one year it's one holding company, the next year it's another holding company. But what I'm saying is this has manifested itself, in the client's opinion, they've devalued the industry in general.
I want to get to the point I was trying to make badly. I think that agencies often respond to the need to produce consistent results.
Agreed.
With public shareholders and analysts who have a lot of other things to do and don't have a particular interest in the industry. They just need to see predictable results so they don't have to think about it.
It's fair.
Now, that is one way to engender something resembling trust and get investors to put their capital to work with a given company. I think it's better to put out a story about the long term and deliver against that over a long time horizon. The two contrasting examples I could offer would be, say, Amazon, where forever Jeff Bezos and Amazon's management would basically not be held to any particular goals. They did provide some guidance, but basically they said, we're just going to do our thing, and if you want to be an investor, come along. Netflix has done this too, and it's been very helpful. It doesn't matter how much capital Netflix is bleeding. They can keep getting Wall Street's capital because they keep growing, they keep justifying.
Yeah, Madison Avenue isn't at their luxury.
And the other extreme that I still remember, I think it was Cablevision, the stock. I used to be a cable analyst, 2002 or 2003, and I remember the Dolan family decrying how Wall Street was so short-term oriented, and how, but I remember thinking at the time, there were some issues there. I remember thinking, it's because Wall Street doesn't trust the management. And that was sort of the extreme example, that if the street can't trust you, back to your point.
So we got trust on both sides.
Trust is absolutely the issue. And if you can persuade investors to trust the investment choices of management, then I think you can get away from the short-termism which causes the competitive behavior you're describing. It's very circular.
I want to talk a little bit about, clearly, we're seeing a massive consolidation on the media side in response to sort of the duopoly and the tech giants that are out there, whether it's AT&T and Time Warner or Disney and Fox. If history is any lesson, we should be getting ready for consolidation in this business. How do you view that? I mean, do you think consolidation is inevitable for the Madison Avenue ad giants? But more importantly, do you see them as potential targets? Because we are seeing that there's not as much interest in these companies as one would think. Clearly, there was no buyer, or let's say very few willing to buy on MDC. There wasn't even a lot of people that picked up the book, which frankly was shocking to me, because as a curious person, I would pick up a book if anybody was trying to sell anything. What's your prognosis overall for sort of M&A in this business? Because clearly to compete, the size does matter in this arena, and something's got to give here.
Well, it's funny, going back to when Publicis and Omnicom were supposed to come together, I remember saying, there's an inevitability around certain M&A.
Yeah.
And at the time, we could have said, it was, IPG and Dentsu or something else. But I also said, with every passing week that something doesn't happen, it's increasingly less likely that something will happen. And that's equally true now. There always has to be a catalyst, So you could look at, again, the IT services firms. Yeah. And if, for some reason, any given reason, any one of the larger players decided to do something, that would cause others to do something.
Right.
There has to be a catalyst for M&A to occur. It's not a given that a transaction happens. I mean, take Roku's a good example of a company, right? Where they look objectively.
You think they would be snapped tomorrow?
Yeah, but something has to be the catalyst to cause a potential acquirer to buy them.
What's going to be the catalyst for Madison Avenue?
Well, like I say, it feels like, I mean, they can come from out of nowhere, really, but it's an individual decision maker at an individual company, right? So again, I'm not saying it's going to be the IT services firms, but you think of like by size, who's large?
I mean, I think a lot of holding companies are holding out hope that that's what's going to happen, right? We think, but a lot of them have signaled the price valuations are still too high.
But the industrial logic, I don't know about that. I mean, the industrial logic, though, is not quite the same. And I think we are transitioning from a period where, you know, certainly in the 03, 04, prior to that point in time, the industrial logic behind combinations was largely around media.
Yeah.
And now we're kind of at a point where the incremental advantage to more scale, at least for the four largest players, is not as compelling.
It's true, scale for scale's sake. Let's talk a little bit before our time wraps out, because you have been one of the more quoted people, never mind on Madison Avenue, but on the platforms. I wanted to get your take on sort of, we've come off of a year that no one would have expected to see what they saw when it comes to Google and Facebook. Anything you did, to some degree, do you see anything that's going to loosen their grip that they have on the digital ad business? And I want to give you a chance to, because we're coming close to almost a year ago, so you've got a couple of days to sort of maybe amend this. You said on CNBC that Facebook was not well managed. You also said within a year, Mark Zuckerberg or Sheryl would not be in the same job in 12 months. So do you want to amend, and what's your take?
Well, I mean, almost everyone who reported to them is kind of moved on.
Fair point.
So it wasn't that far off the mark.
But you didn't say.
And that wasn't an advocacy position. That was an observation.
Right. Based on? Based
on certainly when Cambridge Analytica occurred, and based on all the incidents that had occurred in the 18 months leading up to that point. You know, listen, I mean, as an analyst publishing research for institutional investors, the vantage point I was very focused on was like, what impacts the long-term value of the stock? And the concerns that we had to focus on from an investor perspective were very much, you know, management certainly is an issue. From where we sit now, I mean, at the end of the day, our issues are what helps our clients balance risk and reward. And towards those ends, it's always a case of, listen, it's not our business as to what a company does with its management. It's not our business as to whether or not any given media owner is even around 5 years from now. We have to make sure that our clients are, you know, doing what's right for them. Again, balancing risk and rewards, the best way I can think of to characterize it. That said, I mean, to the prospects for growth, they're still going to keep growing, again, because there's enough advertisers. And I said this even when I had the sell ratings on it. It's like this stock, what I got right was saying that the market size is only so big. It has to decelerate.
Right.
And they will decelerate, but they'll also keep growing for the foreseeable future.
Exactly.
All right, I'm going to cut you guys off because I have 2 questions from the audience for you. But yes, a round of applause. That was great. So I have two questions from the audience for you. First, part of the cutback in spend seems to always coincide with an agency change. When will media agencies win business and the advertiser raise media budgets? I love the giggles that I got from that. I know I'm getting giggles from the green room on this too. I'm just saying.
I mean, that's a good question. I think, again, I go back to this point that agencies need to get better at persuading marketers as to why they should. Using the language that they use themselves, preferably.
Right. Fair enough. So what do you think agencies are doing right in a world where there are issues of trust, fees, and contracts, and media companies treated as vendors? What are agencies doing right?
You know, I'm only a few weeks into seeing what we're doing specifically, but I think that it's safe to say that there's way more education that's been going on. I think that's probably the very first thing. Education is easily the most important thing. Again, I've not seen any fear of having those conversations in my time.
I think people like Matt Baxter standing up here and saying what he said is the smart thing to do.
Yeah.
When you have people that stand up and say, it's all fine, and you have clients who are literally saying no, that's a breakdown in communications, right? And as long as people are willing to address it, it's going to get better. If you hide from it, then someone's going to find it. That's what happens.
That's absolutely true. Absolutely true. It's a matter of trust. Thank you both very much, Brian, Suzanne. Really appreciate it.
Thanks.